All right, guys, what's going on? Again, we're going to do another one of these sessions, talk about some of the latest investment ideas, what I've seen this week, something that may catch your attention. We talk about three different hedge fund letters that I've seen this week, some portfolio updates, and I do a breakdown of Dell's presentation. This is the first time I'm seeing them, so you're going to kind of see the first run through the process. If you got questions or whatnot, just drop them in the comments and I'll answer them as they come in. So without further ado, let's jump in. We're going to do three of these hedge fund guys. I've met some of them in my career. So let's say Bill Ackman, Dan Loeb, and David Tepper. We're going to just break down the current portfolios. Obviously, you can see I'm just on Seeking Alpha, so all of this stuff is available publicly. You can just pull it up and just look at the information, see what they have to file these 13F filings, so you could break down what information either they're buying, selling, holding, are they increasing the stake, are they decreasing the stake. Sometimes you can see large positions like maybe a swap or something if it's large enough. So in like Bill's case, you probably could have seen a couple of his hedged positions, but they're required for if you're managing over $100 million, you got to submit a regulatory 13 form. It's called Form APF, and you just submit this information saying I'm doing this. This is the trade. It's a large trade. I'm a large trader, so I'm submitting it. And so let's begin. So Ackman's got a pretty concentrated portfolio, usually under 10 stocks. A lot of them are usually in the consumer goods retail space. So that's where he specializes. It's where he focuses on the most. And so it's pretty much names that we all know. So let's go in. So first, I know a couple guys that buy or own the Pershing Square Holdings business. It's valued at like $10+ billion, and I think it trades on the London Stock Exchange of Amsterdam's Euronext, and it's been around for quite a bit of while. Um, you could buy it below net asset value, so you basically you're paying Bill to perform for you, and he's actually a great hedge fund manager. So over a 10-year horizon, you're very high likelihood that you're going to outperform the S&P because he has a concentrated book, and a large portion of his net worth is in this as well. So let's go right into what he's been either buying and selling. So just browsing through this, I can see a couple things. Last year, he bought a large stake in UMG because he was going to do the SPAC, but so he bought it at 18, he's got it at 21. So if you buy in at this current price or below this current price, you know he's done all the work for you. You can buy it at 19 and a half, so you got a 10% discount. Again, big thing. So we know his biggest failure this quarter in the last two quarters was buying into Netflix, which was kind of crazy move. It's like one of those trades that he's done with he wasn't at the helm. He had one of his team members manage this deal, and it was a massive loss. And I think they just like lost like 2 million subscribers. The whole thing was just like he bought it at the peak, and the second they bought it, they realized they made a mistake. So again, we're going to see the trend for his portfolio, a lot of consumer brands. So look, he's selling off Chipotle. It's probably one of his most successful trades in the last 18, 24 months. He's been owning this stock for quite some time. It's probably one of the best positions that I've seen him do in the last 3 years to revive his book since the Valiant trade and Herbalife. Restaurant brands, it's probably been maybe 10-ish years since he's bought this business. It owns Burger King, Popeyes, and I think Tim Hortons. And really good brand. It does the deal with 3G Capital and a couple other guys. I think Buffett was part of the. I think they own Heinz too in that portfolio. Hilton, when these guys went public, I think he bought in quite a bit later. So you can see his average cost basis is 72, and I think this is trading below that at the current moment. Oh, it's 135. So like he's up on that. And Domino's, again, all consumer retail brands. You're all familiar with these brands. So let's see what he's keeping steady. Lowe's, one of the longest term holders in Howard Hughes. He's been owning this company since he took it out, right before bankruptcy. He's been owning it since then. Railroads is one of his biggest investments. He's got 27% ownership in Howard, which is pretty impressive. I think he's going to keep that for a very long time. You can see that's pretty much it. So he's got what, 8 positions worth about 10.3, $10.4 billion. Pretty simple, pretty straightforward. I forget that he still had these preferred ownerships, preferred stock in Fannie and Freddie. So since 2013, I remember I executed on some of these trades back then. So like he was buying the preferreds, I think at like $1, $2, and these things have really never moved. So 58 cents. He's basically waiting for either the government to release these assets or to get like privatize some of these lending facilities, and then just they'll go from like 2 billion to $20 billion in like 24 days, and then they'll be worth the trade for holding for like 8 or 9 years. So next up, we'll go through these quicker. Is Dan Loeb. So third point, he's got a pretty diversified in terms when it's compared to Pershing Square, but he's way more maybe not event driven, but like more active for sure. So you can see pretty spread across. Antero is a new name I haven't seen before. Colgate, T-Mobile, Walt Disney. No surprise to see these guys selling off their e-commerce brands, so Amazon, S&P. This is the holding company that does all the ratings, like a Moody's, S&P Global. Uh, Intuit. This is a solid business. I'm sure he's just getting rid of it because it's, let's see, it currently trades at 46, so he bought it at 200. So 446, he's more than doubled on this position. And after they did the Mailchimp deal, which was like $12 billion, I think it will be like another 3 4 years for them to start maturing some of those assets, and they probably won't have to spin off anything because they're a massive business. Not familiar with this business, but at 25, that makes sense. He's got a price target or price entry way above that. Microsoft, let's see, so he's getting rid of these positions. Interesting here is CEO and CFO have sold like $24 million stock in the last week. Zendesk, not a big fan of this business. Alcoa, still a winner in terms of steel. Let's see what else. Energy, this is a new position. I haven't heard of these guys. Very bullish on PG&E. I think this is the company that filed bankruptcy in 2020 because of the energy crisis. I wonder if they have the same problem with the current energy blackout grid that's happening in California. So he got in around 11. It's at 13. Man, that stuff must be very dangerous to hold at this current moment. Danaher is probably one of his best, or most probably like a GE General Electric holding position you want to hold for a couple of quarters. The massive. What is he in? He's at selling at 130. He's got a 14% stake. He's definitely very much in the money on this stake. So he got in at 60, $70. Danaher, run by two brothers, the Rails brothers. Definitely one of they own some fantastic businesses, mostly in like, say, water filtration, diagnostics, a lot of these other like really boring healthcare related businesses. Sentinel One, this is a new cybersecurity business that I've seen a lot of good things. I'm not familiar with how they compare to CrowdStrike, but United, got it. Okay. So what else is he keeping steady? Crown Holdings, cool. So got to get an idea also. So he's got about a $7.7 billion book, so a little smaller than Ackman's. And let's look at like what's the biggest position. So PG&E, that's hefty at 10%. So just about 700-800 million dollars. Oh, 800 million. Danaher, he's pretty big bet on Sentinel One. So Sentinel One is his current play. Everything else is pretty much tiny. Like those three positions take up about 30% of the book right there. He's got a position in TransDigm too, solid aerospace business. Interesting. All right, so David Tepper, former Goldman guy, he's excellent distressed investor. I always like looking at his positions because of so many value plays. He like buys fallen angels and he kind of holds them at a position where like they're at an inflection point. So you just there's a good chance that one of them are going to do really well because he's buying in for a 2 to 3 year holding period. So let's again another energy play. Constellation Energy is pretty. I think a lot of these guys are the assets they own or former Enron businesses, so they're actually pretty good businesses, and those traders are pretty smart. So these guys have been. It's been a solid business. It is very much in the money. So he bought in at 50 to 70 bucks. It's 87 bucks. Okay, it's part of Exelon. That's a major business. Salesforce and Aptiv. I'm not familiar with Aptiv, but I think it's a media business. Maybe. HCA is the largest hospital provider in the country. Alibaba, that's interesting. Caesars, it's a very notable private equity business. Apollo has owned this for many decades. And Walt Disney, interesting. So these are basically revivals. These are like expecting some form of betting on some turnaround on both energy. Alibaba's a big play on international B2B, healthcare, and then these two are really travel and tourism. Netflix is an interesting one. I'm surprised. I'm sure he bought in after Ackman got blown out. So so get a reading. So he's swapping Sweet Caesars in for Las Vegas Sands and Wynn Resorts. Got it. And he's going. Okay, he's getting rid of the index, the energy index. So this is interesting. Increasing into Meta. Okay, Energy Transfer. This is a big MLP. So he's getting a dividend on this stock. Is at 12, and he is in around that price. Got it. It's getting okay. At Kohl's, this is a fantastic. It's like a almost a dollar, like a dollar store competitor for retail, and they've really turned around some of their assets. I think they're liquidating some or they're selling off some as well. So they're restructuring. Okay, so surprised he's getting rid of Google, but also Macy's. I'm surprised he even owns that. Microsoft also, this company stock probably has peaked. Probably doesn't have much upside anymore. What else? Oh, Micron. Interesting. So still 2% position, so it's quite big. I think he's probably got like an $8-9 billion position portfolio. So he is basically selling out as this company's moving up. So he's in there at like around 30 to 50 bucks, and the stock has been trending upwards. So he has sold out 3%. Stock's definitely at 60. So they just did the $15 billion manufacturing bid for, I think, in Idaho. So they're going to be a big beneficiary of the CHIPS Act, $50 billion CHIPS Act. So this will be interesting. He's trading around it. He's probably made more than double his money on this position alone. Uber, that's new. And more energy. PG&E seems to be a common stock in between some of these hedge funds. Interesting. Amazon steady. He's also got another MLP. This is a popular name, but I'm not familiar with them. I've seen it before. So let us look. Oh shit. Okay, so he's 2.5 billion. His private family office is probably much larger and it's not disclosed. So let's look at his largest positions. We're looking at okay, so he's basically has 30% in Google, Amazon, and Meta, Facebook. and that's a pretty substantial position. That's why he's shedding those assets. Got a huge stake in Macy's. Would not expect this company to really do anything ever again. Like they're basically going to just keep shedding assets until they become a silo, like a small little fraction or a shadow of what they currently are. All right, so Occidental was one I missed, but 7%, 6.5. Micron is pretty big, so that is a major position. That is probably the most attractive position from what I'm seeing right now in terms of probably either both short term and long term. Really because of the CHIPS Act. That's probably the number one catalyst here. And that's domestic. It's bet on domestic investments versus like Taiwan and China, what's going on over there. Interesting. Cool. So that wraps it up. I want to do that. I don't know if most people do this or not. I think it's pretty important, especially if you have some exposure to these positions and you're thinking about, oh, what are these guys doing? Should I be copying them? People do this for Buffett's portfolio all the time because they talk about, he bought Coke at this price, or I'm buying something else at that price, or I own Amex because of him. And it's kind of cool to just be like, all right, they're doing all the homework for me. They obviously make 20, 25, 35% a year, and then I'm just riding on their coattails. Nothing wrong with that. That's why the disclosure, so you kind of have an idea of what's happening in the marketplace, specifically when you're at $100+ billion trades. So I also wanted to do this. This is something I didn't get to go into the Dell's recent presentation for the second quarter, and this is a performance review. So actually, let's check this out. This will be interesting. It's different. Just pulled it up from Seeking Alpha. You can just pull up the PDF from there, or you can do it live on their website. We'll do a quick breakdown because this company has been molding and just shifting like in the last like 7, 8 years. It's, between EMC, VMware, and a couple of their assets they've just been buying and selling and just changing how the stock has the ownership cap table, how they're generating revenue, the margins. You've seen IBM do this too with Kyndryl, so they spun off their MSP assets. They're going very heavy after the Red Hat acquisition. They're going very heavy into the cloud space. So it looks like Dell is doing the same. They're uniquely positioned in data and multi-cloud, and they're definitely going to win from the consolidation effort. I've seen them consistently produce this 3 to 4% revenue top line growth, which is really impressive given the scale, how much revenue they currently produce. But what's really impressive is the 40 to 60% adjustments to the free cash flow. You could really get this number that high consistently. You're really going to be extracting good dividends, and then two, you're going to be extracting a lot more to do either reinvestment in the business or finance new acquisitions. And they seem to be doing all three. So let's look at the stats from Q2, up 9% on revenue. Crazy. They took about almost $2 billion right there, making about $1 billion off that. So pretty steady at that scale. Margins. We're coming off the pandemic high, so a lot of the purchases in the computer space have weakened the demand. They're seeing growth on almost like their major sectors. So servers, Dell's gigantic in this space, and networking, and then storage. These guys are crushing it. So let's look at their technology strategy. Now, this is interesting because from what I've always known them is the PC computer networking storage area. Apex is a pretty solid part of their business, but Edge and Telecom, multi-cloud, these are huge businesses that have evolved from their EMC and VMware acquisitions, and they've like really kept some steady, solid pieces in the core business in the mothership and Dell Technologies, and they spunning off like anything that may be like non-related or just not helpful. So I like this chart that they do so well because they have such a large piece of the global IT market. So you can see they have hardware, services, and software. It's three elements of the technology departments. And you're looking at like what is core Dell currently doing? It's at PC and peripherals, and then server networking storage dominate this space. Extended market, telecom, that's new. Technology outsourcing, these margins aren't as heavy and they don't have the competitive moat, but given the size and scale of their services business, like in terms of like support and like staff on demand, they're doing this. And even infrastructure as a service, that's Broadcom space, they're competing on that. But the systems and these application space is very much outside of their territory. So we'll see how these guys expand. I think they're just going to keep going harder into hardware. I don't see them doing much in the IT consulting or development space. Let's check out some of their big customers, what's going on. Obviously, T-Mobile is a big deal currently, given so much that's happening in the 5G space and the deal they just did with Tesla. Let's check out some of their cloud strategies. Let's see, multi-cloud, working with all of the top three vendors. Snowflake partnership, that's pretty big given the fact that Frank Slootman is pretty heavy on this data, pay per data usage. So that's going to be pretty interesting to see how that plays out. Software driven, I don't know if these guys are going to have the edge they need, but they got it if they do it in cybersecurity like this. Yeah, definitely mission critical stuff. So let's see. Architecture work. I gotta look up what PowerFlex and PowerStore are. I'm not familiar with what these delivery units are. Apex is the one that I skimmed over before, so this is their got it. Cloud services, VMware. Okay, got it. Looks like the container business is for data units, public and private cloud, so some hybrid stuff over there. This is what I'm familiar with, what they do really well. The storage units, they just crush every end of this market. So from high end, mid range, hyper converged, and all flash external. This is where they're dominating. 32, 42%. These are gigantic market shares. They're the market leader by far. Even in gaming, this is the area where they've dominated again. And then PC monitors. At the back end, you don't see this, but server units are critical from Dell. They just crushed this element of the market. The x86 servers. All right, about halfway through this. Let's see what else there is. Client solutions. Impressive how many times you can. Sometimes you gotta go deep, but Dell has consistently been number one, number two in areas, and they stay in those focused areas. So here they are. Even in the commoditized area of PC servers, they've gone from in 12 years, 11 years, 17% to 26%. So we're talking about like almost 40 to 50% growth right there in market share in PC units. So you're competing against like Lenovo and like maybe Apple. Apple's not really in the space of like B2B enterprise. It's just some of the power of the functionality with Microsoft. So let's see our Unix systems, Linux systems. And I'd like to see how they do with this gaming software, Alienware. Infrastructure solutions. It's interesting. External stuff. All right. You could break down some of these gap results. Let's see what they're doing over here in terms of revenue. So they get steady margins, 12% growth rate, 5% on growth on operating margins. See what their income. So when their growth rate and net income is growing faster than the top line, that suggests that they have very high operating leverage. So they're doing a really good job of like every time they increase by let's say 1%, $1 here, it actually increases profitability by 2x. So that's just a well-run business. All right. This is pretty much summarizing it, and then we'll go into like probably an appendix. So let's see, cash flow. pretty healthy, but it's been trending downwards. It might just be because of either working capital needs. So it probably have to go to one of the earnings reports and talk about either delayed a shipment or expecting reduced growth rate going forward. So 33 cents, 240 million in dividends. They got a buyback plan. So like as I was saying, they produce so much in free cash. They're just like going straight into growth, payback, debt payback, pay down. Super impressive. So solid guidance and coverage for the last quarter. Let's see. I got a room for ESG stuff. Not as important, but if you could break it down, then it is kind of cool to say, all right, sustainable materials, that's good for them, as they should be doing. Good ethics and compliance, that's great. Net zero, renewable energy. So that wraps it up for them. And so I just wanted to do that. It was different, something unique in the space. Like we haven't done anything like that yet. I'll do one or two of these, maybe separate or combined. I don't know yet. But we'll figure out what routine works, and then we'll just keep going into either specific ideas like this. I'll either do a deeper dive into like a Dell or one of their either clients or their vendors or one of their spin-off assets, or I'll do a separate deep dive into like hedge funds and just talk about what assets they're buying and selling, and what exposure they want or what exposure they don't want. So we'll just keep doing these deep dives, and then we'll talk about which ones make sense to take a position or sell a position. I don't know. We'll find out. Thank you for tuning in.